What's up there, YouTube?
Yeah, what's up?
So
we
buddy, how'd you like that market crash yesterday?
Which
The last 2 days, the crypto
the
market.
crypto market? In crypto, not a big. It's to me that's not even a crash. Technically, it crashed 20%. Corrections 10%. It didn't even do 10%.
It's another walk in the park day for crypto.
Blip in the it hit a speed bump. That's not a big deal. The same thing's been going on with the equity markets. It's funny, we're due for a crash. Literally a crash. We've had the highest debt ever in the United States. And everybody on Reddit and all the newbies are like, oh, we had carnage. What the carnage? We didn't even have a 3% correction. Wait till we get 50%, 80%, 90% maybe.
So like we tried to talk about before, Evergrande, the Spanish sound.
Oh, yeah, Evergrande.
That tanked. We were talking a little while ago about
the Chinese Mexicans.
Yeah.
We gotta.
I don't even think you're allowed to say that.
Yeah, okay, cut. People will edit that part out. We'll pretend we did though.
Well, you didn't say anything bad. It doesn't sound like a Chinese.
So yeah, it doesn't sound like a Fu Manchu or come with some buyers.
Yeah. All right, now that was completely racist. Anyways, that's besides the point. We're talking about how the fear in the crypto markets from that Chinese.
Yeah. Let's get back on the subject.
So, I mean, them going under, a little panic, people panic selling in China, blah, blah, blah. They weren't sure if they were going to get bailed out. And sure enough, this morning, CCP bails them out, $19 billion. And like we were talking about earlier, good old BlackRock bought up their debt for pennies on the dollar.
And BlackRock isn't dumb retail Reddit crowd. Well, I just call people dumb. I didn't mean that. But non-smart institutional money.
Yeah.
There's institutional money. They know what they're doing. And if they put their money where their mouth is, they're going in. Oh, by the way, not to change the subject, we'll come back to it. But guess what also, the SALT conference, Anthony Scaramucci's deal that he's had for a long time, the biggest hedge fund industry out there, hedge fund conference out there, and the main topic of the conference, go ahead, take a guess. You can do it.
Cryptocurrency.
Exactly.
Imagine that.
Yeah, all the smartest guys out there that run the world are basically all in on crypto. And
we knew this on it. They just didn't want to admit it.
Yeah, and now they're coming out. Yeah, and every hedge fund out there, and that's what's creating. And you can look at that. We have, in my opinion, everybody's got their perspective, and perspectives, whatever. And so basically, we're coming down, and this isn't a crash. We had a crash. Technically, it's 50%, but we're kind of just floating, chopping up, down, chopping down. We haven't really had a flush out. They had major I call carnage just 50% or more, not 3%, especially in digital world. So, but we've had this correction, and these guys, the whales, are still buying right now at these levels. They want to get in there. They don't want to miss the boat like they did Ethereum. So they're in on Bitcoin. They're going in all coins now, and they're driving big money. They're not retail crowds.
So the couple that they missed the boat on Ethereum, the big institutionals, and I think they've been in Bitcoin for a while, but quietly. But they missed the boat on some of these bigger alt projects, especially Ethereum. So the one lately they've been blasting up was Solana, ran up from like the 30-40s. I'm not exactly sure, but it was topped out close to 200. Pulled way back on this correction. It's trading around like, I think, 130. I'm not sure exactly what time it is right now, where it's at, but right around there. Yeah, well, hey, listen, our markets run 24/7.
Yeah, time of day, it's like there's 24 hours in the day. It's always the time of the day for us.
Why shouldn't traditional markets also trade 24 hours a day? There's no reason not to.
Well, they do. Well, futures do. But, that's the thing that's funny in the United States, is you and I are both living in tech right now, even though virtually we're all around the world.
Speak for yourself. I'm soon to be on an island.
Yeah, we're not Neverlands. Never mind, that's a different subject. It wasn't me.
Coming soon to a tropical island near you.
Yeah, we're actually there right now by computer, but anyways. So, should we edit that part out, man?
Just keep going.
So, what was I saying? Where was that? Remind me where I was at.
We were talking about how the institutions.
Futures are trading basically 24/6 or 5.5. Kind of. Futures open Sunday night at 6 p.m. Eastern Standard Time, and they close Friday at roughly 5 o'clock, something like that. And then you got Saturday off. Crypto's up 24/7. So.
Yeah, I mean, there's no reason in this day and age with technology and computers you shouldn't be able to trade this stuff. Whatever.
Especially because it used to be back in the old days, literally 10 years ago, and behind that, we had pit hours. Like, I used to love trading livestock because the market's open at, I think 9 something in the morning, and you're done by 1 o'clock. Your day's 4 hour day. You're trading in and out, boom, that's it. Have the rest of the day off. And then, but now the pit hours, they're technically there in some, like the S&P, but not all the pits, it's going electronic. So it's like, why not be open 24/7?
Yeah, there's kind of no reason not to have it. But anyways, I guess we were talking about, the Evergrande.
Yeah, back to the subject.
Yeah, now that they're bailed out, and then we had, this morning the CCP announced that they were bailing them out. I think it was $19 billion BlackRock, and I think UBT picked up a bunch of their debt. So you got some confidence coming back in the markets. We've seen stuff spring back. I mean, the market cap in crypto went from 2.2 trillion 3 or 4 days ago to yesterday's low was at 1.9 trillion. So lost about 300 billion in a couple of days, and then it's back. I think it's close to 2.1 earlier today.
It's a drop in the bucket.
Yeah, I mean, Chinese investors are people that were invested in that company, in China. Like, obviously, it lost. I don't know the ticker price exactly. I know it went, way down, that stock price. And like we talked about before, you're heavily invested in something that tanks. You need money to pay your debt or cover expenses, losses on that, and
everything's leveraged debt. So you have margin call.
Yeah,
and it's hey, Mr. So and so in Tokyo, we need you to. I know you've been out, hollering up, spending $1,800 on a bottle of champagne at Walmart. And everybody's out there clubbing. Real estate's like, I don't know, $1,000 or $2,000 per square foot or something like that. And then but it's because they're borrowing money like crazy. And they're gonna have to pay. Hey, you got Mr. Wang Changsu. You got to pay your margin. Okay, so he's got to sell some stuff.
Yeah, he got to sell some stuff to get that money. The one thing I thought was interesting is that company I was reading. I believe it said they own something like 4% of the world's real estate. So that, puts a huge real estate holding. And then BlackRock has been scooping up real estate like crazy. I think they're trying to get it to a world where you own nothing and you're happy about it. You rent everything. You lease your car, rent your car.
The reset.
Rent your house.
That's a whole deep rabbit hole. Yeah, the great reset.
Yeah, well,
and if you can get on with crypto earlier, like we are, then you can be involved in it and capitalize off it. But if you're the average person at home that doesn't have exposure to inflation, off the top of my head, the United States is now at 138% debt level. In other words, we owe 138% more than we have gross domestic product. How productive this United States engine is.
Well, they're trying to raise the debt ceiling. I think
it keeps going up. This is a scary fact. All right, this is a scary fact. Can I say something?
Yeah.
All right, I'm just messing. So, So when 1929, crash of 29, the debt level was about less than 20%. I think it was like 19, but don't quote me. But it was less than 20%. So the whole United States was borrowing 20% of what our machine, this company, United States, was putting out in GDP. Now we're at 139%. It's the highest level it's ever been before. Just to give you an example, before roaring, but technically it's roaring, 80s and 90s, the Great Bull Run, 20 years roughly, from 81 to 2000 to like roughly 2000-ish. So 20 years. We were at about, off the top of my head, 30 or 40%, I think down to 30 or 40% of our GDP. That's how much debt we had. And you can see when we don't have a lot of debt, all that money that we have, it flows into the markets. Well, now we're in a situation where we have 138%, highest it's ever been. You have quantitative easing. You have interest rates down to zero, basically. We're going to have negative interest rates soon. Just to give you an example, if you pull up a chart of the Nikkei 225, go back all the way to the 90s. If you bought in 90s, you're still down 40% to this day, to the present. So we have no really room. How much more fake money are we going to push out there? And here's the thing, though. This is a cycle. Everybody think, we're going to have, what's the word I'm looking for? It's the end of the world, basically. Financial Armageddon. No, because what the Fed is going to do, basically the banks need to loan money, so they're going to borrow more money from the Fed. The Fed's going to print more money, and basically the world's not going to end. It's solve the problem. But what's going to happen is the value of that fiat currency is going to keep going down and down. So the average person, to your point, you said they're training us to be happy with renting things. Yeah, the powers that be, whether it's on purpose or not, that's a conspiracy theory. But basically, bring us the world down to where they need the big brother's daddy's permission to do anything. And you better be a good person. Oh, by the way, we just lost freedom. Now you have to have a COVID card proving this and that. Be able to conduct business.
We're going way down off-topic rabbit holes. But I think one thing that's going to happen is they're going to have to stop printing the money, and we're going to come into deflation. And when you come into the deflation with the amount that they've debased fiat, in the short term, I think it's going to cause chaos. It's going to cause
Well-
prices to go up. The government's going to get all the dollars they can and then start the deflation process because you go negative.
But that
interest rates, it costs you to sit in your bank.
So here's the thing. Yes, deflation, but temporary. It's the temporary deflation. We will have. I don't know if I've been saying when you and I were in the mortgage days in 2000. Oh, interest rates are going to go up. Here we are 20 years later, and interest rates have gone down.
I mean,
we were refining people, and they thought they were getting a good deal at 4.5%, and now we're down to 2 or something. Yeah, and a 30-year mortgage.
Well, my buddy Bob in Amsterdam,
which is half of what inflation.
Shout out to you, Bob in Amsterdam. He said they have negative interest rates. So he said basically they charge him a fee every month for his money sitting in a savings account.
Yep,
you lose it.
Well, and it's again like people say, well, why would you buy a U.S. note, a Treasury note, or anything like that? And it's protect your capital. So old school people that aren't into crypto and digital assets, this whole new way of thinking, old school, I don't want to say age, but they're basically used to, if you want to protect your money, the United States is the go-to place, safe place. So buy U.S. dollars, and then with the U.S. dollars, or if they don't have U.S. dollars, other countries, and then turn around and buy fixed income for 0.5%, and eventually be negative. Like you're paying them to store your money to keep it from losing it in the market.
Bond yield's already negative now.
The rate to loan money to banks is negative, but if you buy like a 6-month Treasury, I don't know, it's still like 1% or something. Like I get 10 years like 1.4 off the top of my head right now.
Well, that's the reason that they also.
Which means you're losing money because if you figure out our inflation rate of 5%ish, you lose money.
7 or 8.
You're giving them money to lose it.
Yeah,
realistically, that's what's supposedly.
The reason the SEC is going after some of these crypto companies so hard is I think that the yield that they're paying on stable coins, like I think Celsius is 9% on stable coins, which are pegged 1-to-1 with the dollar. They don't fluctuate in price. But you can take that and you can go on like a Coinbase and buy, $100 US, you get 100, USDC stable coin, and then deposit that in Celsius and you're getting 9% interest. When your bank is paying you, 0.01, right. But on top of that, the reason they're going to fight and push back on this so hard is they're now competing with U.S. Treasury notes and bonds.
Right.
Because they can't offer them 8 or 9%.
Right.
But these guys are making it work. Because they're putting that money to use and they're lending it out, and they don't want to give up that control. They want to control that lending, that payout rate, and they think they can do it better. Hey, capitalism, man, free market.
Yeah.
Let the market determine the lend price. Let the market determine the rate.
Right. And that's what you see is going on. I was going to make a point earlier, but I didn't want to interrupt. But an interesting fact, if you think about it, if you kind of peel the layers back off the onion, is we talked about market cap on crypto is roughly $2 trillion.
Yeah,
let's say $2 trillion, round it up, done, whatever. So $2 trillion. You can have the market cap stay the same, and people cash out of it. Let's say, for example, we had a correction or a crash, or whatever. We had more weakness, and people cashed out of their position, or they lowered their exposure, right? Let's say, like, we'd like to do that. We have our main allocations, and we trade around our main allocations as the market gets frothy, and then the markets get weak. We trade around that core allocation. If the whole world, everybody that has a participation in digital assets, trim some fat off their portfolio, the market cap can still stay the same because you constantly have new people coming into the space. So if you take out, let's say $1,000, and just use an example, out of the market, some other guy, 10 other people could put $100 into the market, and the market cap would stay the same. And then when we do, so even though price is going lower, the amount of crypto out there is the same dollar amount. And then when we're done with the correction and it goes up, you're going to see that market cap skyrocket because now you have more participants putting more money in. It's like a compounding.
So
factor.
I think, though, the reason the market cap stays relatively high is because most crypto traders don't cash out. They swap, they sell, they flip into USD stable coins, and they just leave those stable coins inside their crypto wallet, and they wait for a correction, or they buy the dip with it.
Exactly.
So that I believe still counts towards that
it's a digital
market
asset.
cap.
Yeah,
because
crypto,
it's held in crypto.
Don't
get me wrong. Some people do cash out and take the actual money out and convert it to fiat. And with the stable coins, if you sell one of those for $1 and cash out, those coins are like burned, so they're out of circulation. And then when somebody, say, wants to buy $1,000, stable coins cash for USDC or Tether, they mint the 1,000 coins and cash comes in. So they keep that's how it stays that peg and it doesn't get overinflated. But to your point, yes, people pulling out lowers the cap. But I think as maybe more retail people start to realize this, to keep the money in crypto, but you can keep it at $1 or keep it at a relatively safe number. It's not going to wildly swing on you. It's going to stay at $1 or whatever currency that one's pegged to, because they do multiple currency ones.
But what's cool, interesting to me is a lot of people, we're used to, well, in one day we'll be talking trillions, but right now, let's say we're talking, less than $1 million or whatever. Everybody has different numbers they're used to working with. Some people are trading $1 billion. I would love to trade. One day I will, but not right now. I'm kidding. We got to work our way up there.
Yeah, we'll get there.
But the thing is people don't realize, like, the biggest, do you know off the top of your head, and that's fine, because it switches sometimes, but what is the biggest market cap in the United States right now? Is either usually Amazon, Google, or Apple. They kind of switch around. There's something like $2.3
trillion company, right?
And now they're up to, and of course, if we have 50% crash, they'll
obviously.
But they're $2 trillion. I think off the top of my head, Apple's like a little over $2 trillion, 2.2, 2.3, something like
Possibly,
that.
Yeah.
That just shows you the biggest United States public company is equal to the amount of exposure to crypto assets.
Yeah. So
I wish I was in crypto capital group.
Yeah.
For now, but crypto assets. So it just shows you how big of a market cap
and how early we are on this, even for regular retail, because a lot of these institutions are waiting to get in for SEC guidance and clarity on regulations on. They don't want to get caught with their pants down. Let's say they did something wrong and they're going to come in and bang them with fines. They want some clear guidance, and then
that's how they're that's what everybody. I've actually listened to Ray Dalio I think he's got, I don't remember how many, over 10 billion assets under management with what the heck is that? I can't just, my brain went Bridgewater or whatever. But he's basically I've lost my train of thought. What was I going to say?
Ray Dalio.
Ray Dalio.
Were we talking about the total market cap and the money on the sidelines, so we get that regulation clarity?
So basically, the S&P has, off the top of my head, I think 30 trillion in market cap. It is the biggest index in the whole world. 30 trillion. And again, crypto right now is about 2 trillion. It just shows, like, literally, crypto is 2 trillion. That's roughly a tenth of all the biggest 500 companies in the United States. It just shows you how much of a serious thing this is.
So I think, there's probably close to $1 trillion ready to pour into crypto as soon as these publicly traded companies get or at least some type of framework or guidance and do it. But that thing was beeping, so it's probably a good time to wrap up this episode.
All right, yeah.
Thanks for watching. Like and subscribe.
Yeah, do all that, all that fancy stuff.
Hit the thumbs up.
And we're actually going to do everybody in the next month that does a full like and subscribe and signs up on our website with email, text. Give us your credit card information, your social security number. No, just kidding. but at least the email and text, and hit the like and subscribe. And we're going to have our staff check that, and you'll be involved with a basically no cost webinar. And we're going to take a vote, whatever anybody wants to talk about, whether it's mining or crypto or staking or all the
suggestions. Leave them in the comments below. We'll put links to all our sites and socials content and that. That's it for today. Catch you next time.
See you later.